So firstly, to people who are just in the crypto space, it doesn't matter. They're both going up, right? So that's the most important thing to note. So you can back any horse you want. What we're in the game for is the excess returns. Where can you generate the higher return? There's a lot of dynamics at play. It's a bit more complicated, but do you, as a 28-year-old, get richer in real terms by owning these assets? I.e., can you buy more consumption later? And the answer is probably no. So you are going to have to face with the ugly truth is, I need to find assets that grow, not just optically, like the Venezuelan stock market goes up a lot, but because the currency goes down a lot.
Yeah.
So how do you make that wealth grow so your future self thanks you for the decisions you've made? And I can only come down to two asset classes to create those kind of returns, because these things outperform the debasement because they're driven by adoption of technologies. So that's what I call the exponential age, which is the technology interplay between everything from AI, robotics, EV, whether you want to put in other forms of new energy sources, genetic sciences, Internet of Things, space. I mean, there's a lot of things all happening at the same time, which is why we're all kind of spinning to catch up. And the other side is crypto, which is actually part of the exponential age as well, which is a new financial system and an internet system of value for the digital world. Those things have big adoption trends. We saw that AI was the fastest adoption of any technology, even more so than crypto. Crypto was the fastest adoption of any technology beforehand. AI dwarfed it in speed. I mean, it got to 100 million users in 5 weeks. So those are the opportunities. And it's not like saying, well, you can own NVIDIA forever. It'll be a changing rotation of themes within the overall broader theme. But if somebody's 28 years old now and they've got their $1 million, it depends what they want to do with their life. They can either spend it on experiences, which are massively valuable, as you say, go backpacking around the world, do whatever you want, or you need to stick it in some asset that actually grows. Because if not, you're going to make no net progress.
The return of Satoshi Nakamoto. The mysterious Satoshi Nakamoto, Bitcoin's creator, recently made a surprise appearance on Twitter, sparking wild speculation about their identity. This tweet from the @Satoshi handle, dormant since 2018, hinted at exploring new aspects of Bitcoin. Following this tweet, Bitcoin BSV saw a remarkable 20% price surge, leaving the crypto community wondering about the true identity behind the @Satoshi account. Some speculate it might be Craig Wright, a self-proclaimed Nakamoto. The enigma deepens, but the crypto world is abuzz with excitement. The European Union, EU, is allocating 800,000 euros to investigate Bitcoin's environmental impact. This move threatens strict regulations against Bitcoin and its mining within the EU, potentially undermining MiCA regulation benefits. This initiative targets Bitcoin due to its energy-intensive proof-of-work mechanism. If Bitcoin is branded as environmentally unfriendly, it could face severe restrictions affecting its market. The EU's quest against Bitcoin raises questions about the future of crypto regulation in Europe. SEC's surprising move for Bitcoin ETFs. The U.S. Securities and Exchange Commission, SEC, has taken an unprecedented step, offering hope for Bitcoin spot exchange-traded funds, ETFs. Despite recent delays, the SEC's actions indicate a possible shift toward approving these ETFs. This development coincides with the expiration of the last deadline for ARK Invest/21 shares on January 10, 2024, a crucial moment for Bitcoin ETF approval. While uncertainties remain, the SEC's recent actions bring optimism for the crypto community. 9 new Ethereum ETH futures exchange-traded funds ETFs entered the market, designed to track futures contracts tied to Ether's value. However, their initial trading volumes fell short of expectations, recording less than $2 million in total. This launch follows the SEC's approval of the Ethereum futures ETFs, signaling growing interest in crypto ETFs. Despite lower volumes, ETA's recent price gains add intrigue to these new products. The ETF market diversifies, offering more options to crypto investors. The crypto market recently experienced a 2% retracement in market cap, leading to over $111 million in liquidations within 24 hours, hitting long traders the hardest. Factors contributing to this downturn include a death cross in Bitcoin's technical analysis, a bearish fractal pattern, and the pending trial of Sam Bankman-Fried, SBF, a significant crypto figure. As the market grapples with these challenges, traders closely watch for opportunities amid the volatility and uncertainty. Let's continue our discussion with Raoul Pal.
When I look at Bitcoin, it's the scarcity and the purity of what they're doing. But now we're building ordinals and other things on top of the network and layer twos and stuff. Okay, more use cases, good for Metcalfe's law, good for on-chain activity. ETH is much broader and much more dominant in that broader world. And so when I look at that and think of the ETH staking, the yields, what institutions like about this as well, what kind of people get involved, I mean, everything seems to be more ETH-based. And again, that's not a diss on Bitcoin, this ridiculous tribalism online. And I just look at the long-term ETH-Bitcoin cross on TradingView, and it looks like it's a giant kind of wedge pattern. And I look at that, and that's the kind of, with all price history on a log chart. And I'm like, I just reckon that these patterns usually break up as a continuation pattern, and that would say ETH massively outperforms. If we also know that ETH becomes scarcer every time it's used right now, then it's most likely to outperform. What was really interesting is we've just gone through a big bear market. Normally, everything gets nuked versus Bitcoin. ETH didn't. Traded sideways.
Yeah.
So if that's not a big tell, so if it stays the same as Bitcoin in a down market, what's it going to do in a bull market? So that's my hunch, is that it outperforms. My hunch that in this cycle it'll do the flippening, and then it'll probably come back again, and everyone goes, "See, it was ridiculous. It was a bubble." It's just, but over time, it's a faster growing network. Simple as that. Yeah. The only issue is it's obviously very volatile. So there's that you need to trade off against it. But as a digital bond, it's pretty bloody good. If you're used to the volatility of the space, you can stake your ETH, get a yield. You can either do it through a financial counterparty, much like we can do by getting interest from a bank, which would be DeFi World or CeFi World, or you can stake yourself and take the yield yourself, which is like going to Treasury Direct in the United States and owning treasury bonds. So in the digital world, it is the treasury bond. Does it replace treasury bonds? Well, it depends on your time horizon for investing. If you are an endowment with a 100-year time horizon, what would you rather own? A US treasury bond that yields 5% or ETH that yields 5% and gives you the potential for the technology? Now, sure, you won't weight them the same, but it's got to be very, very interesting to have such a long duration asset with a 5% dividend yield or a 5% yield.
Yep, definitely. So let's switch gears to crypto. I use this analogy. It's very crude. Sometimes I try and explain, how to determine the value of a layer 1 or a layer 2. And I use this shopping mall analogy. Okay, so the blockchain is the shopping mall. The dApps are the stores within the mall. And the users drive the use of the dApps, which drive up the use of the currency, which drives up the price of the token. Is that too crude an analogy right now? Because when I analyze layer 1s, layer 2s, I look at the breadth of dApps and I look at the adoption, the cross-pollination between assets and, really making people comfortable in the ecosystem so they can go one place and kind of one store that has everything they need, whether it's NFTs and DeFi and maybe some social stuff, maybe some gaming, everything. So how do you view L1s, L2s, and does that shopping mall analogy resonate with you, or is it too?
Yeah, I think it's pretty good. I think it's pretty good as an analogy. And if you could own a share of the shopping mall, now that's a shitty business model now because nobody wants shopping malls. But the visualization, how I'm thinking of it is, ETH is actually a digital nation state in its own right, and I'm going to write a big piece on this with the Kevin Kelly from Delphi Digital. My view is all the elements, structural elements of an economy are there. We've got a population. We've got a trend rate of growth. We've got a yield curve that's not defined by a central bank, but designed at protocol level. Then we have the assets that are in that economy. NFTs are assets within the economy. We've got the financial side of it. So that's CeFi and DeFi. And the layer 2s are probably the states within that nation. So you get the choice. Do you want to live in the United States and live in California, or do you want to live in Florida? and you accrue different benefits, but it's actually still under the nation state of the United States. So I'm starting to think of it more as nation states, and ETH is, and again, when I finalize this article, there's a lot of parallels between ETH and a regular economy, but economies don't grow as fast as ETH has, and it doesn't have such a big boom bust cycle. But yeah, I think the shopping mall works, but also think of it as a country, and people start to understand it.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.